Okay, so Kreditbee, a digital lender, raised $200 million in a market that is coming out of a funding winter where capital is hard to come by, and most startups have to do a lot of proving to get that kind of money. So today, as part of our AJVC behind the scenes story, we talk about Credit B, the problem that they solved, how they went about doing this, and their recent fundraise as well. So hi, Aviral. Uh, just jumping right in, maybe you can take us through the origins, the founder's story, and what problem they were solving.
No, absolutely. I think it's in this tech layoff market, it's so hard to believe anybody can do anything positive. And to see a fintech firm come out of this raising money, it's quite fascinating. And I think anybody who's tracking the space, they'll know that uh, lending fintechs have had a horrible 2022. So it's even more surprising on many fronts that a lending fintech has raised in a market like this. Um, so the story starts with the founder, Madhusudan. He graduates from an NIT, spends his first couple of years at TCS, then from a developer he becomes a leader of product managers, works across multiple companies including Huawei. Um, Across his journey, he finds one common theme where consumers in Asia would not have access to loans or credit because of not having enough history. They would have the income and the assets to actually raise that money for themselves, but they wouldn't get access to those loans. So he decided to solve this problem. He would have seen it in India. India is a very credit starved market, especially on the personal front. If you go back to 2016, less than 10% or 12% of the market had credit access. So it's a huge problem. So he finds this challenge, teams up with a co-founding team. He starts a company called Crazy Bee first, which is where you see the name Credit Bee come from. In fact, Crazy Bee is still involved in Credit Bee as its NBFC. And Crazy Bee has a very different start to the fintechs that we have seen recently. Perhaps because in 2016 the funding market was bad. I wouldn't say it's the collapse like now because we had gone to an extreme high in 2022, but it was really, really slow. I think the Crazy Bee team was very conservative in the beginning. They just focused on getting the underwriting mechanism right. Uh, as you know, in loans there are two aspects. One is disbursing the loans, and the second is collecting them back. The collecting bit is defined by who you decide to give the loan, and that process is called underwriting. So the Crazy Bee team focuses on students exclusively to begin with, like some sort of POC, where they give them very small, 5,000, rupee loans for paying their fees or very small ticket purchases, and they would get them back. The interesting part here was they would give this in 15 minutes, hassle free. Imagine, when you and I were students getting a loan. I don't think we even thought of that because in our head it was so difficult to get a loan. So getting that in 15 minutes, especially in a time when the smartphone and data was just starting to pick up with Geo, I think an entirely digital process of giving loans in 15 minutes, that was a very big hook for its customers. But they were not doing anything out of the world, and this is a theme you'll see with this company, which is quite fascinating. They do things really well in a disciplined manner, and they don't go nuts. So they are focusing on
Got it.
students. They're not going too crazy in different products, and that's what they start with.
Got it. Got it. Yeah, very interesting. So the 0 to 1 journey was kind of spotting a relatable problem, running a POC, small, controlled environment, especially with students. I think your risk is also controlled in that sense.
Right.
Um, and then when they sense that opportunity that India is a credit starved market, we know this can work. Uh, what was the next step? How did they attract funding? I see the cap table is was kind of unconventional to start with, right? Not
Right.
the regular investors. And then how was the 1 to 10 and the scale up journey from there?
Right. No, it's a fascinating journey. So they acquired an NBFC license in 2017, and again, people who have observed the ecosystem, they know NBFCs get demolished at that time. So this company is already starting to work in a space which is really tough, but they're still able to execute. They expand to salaried professionals primarily from tier 2, 3 cities to fund purchases like motorbikes and other slightly higher ticket items. Again, they're going after people with good scores but are not served by existing lenders because the process and the friction is so high. So the unlock was the friction, right? Now, when anybody thinks what this new fintech lender does, it's essentially on the customer side, they just reduce the process for a small loan to very little. And 2017-18 also, they are not really ramping up that much. But I think towards the end of 2018, they started scaling. They also raise a round from Shunwei. Um, and they become a financer for Xiaomi. I'm sure you see the connection
Yeah.
as how that happens. And around that time, I think they've reached 70 crores of monthly dispersals, which is obviously non-trivial. And I would say the company has now started to escape the 0 to 1 phase, and they've started to go into 1 to 10. They also discover the large credit problem, and in some way, Credit B arises out of Crazy B. You can see the similarity in the name, and the relationship still exists. So, Credit B is more broad, it's trying to serve a greater need, but the POCs that they have started with, they continue to build on that and they maintain the same ethos.
Great. Yeah. Now, when you talk of, 2018, 2019, we are very close to the 2020 lockdown pandemic kind of phase, right? And that's kind of the test of fire for almost every startup. Can you go
Right,
through that phase? And if you come out strong, you really fly, or you
right,
kind of fold, right?
right,
So,
right.
what was 2020 for them? How did they come out?
Right. So I think building up to 2020, in 2018, they do around 200, 190, 200 crores of revenue and, small profit, 4 crores. Nowadays, a small profit is not enough for a lot of investors, as we saw with
Yeah.
Mamaearth, but still, they grow to, 500 crores in FY20, and they're like hitting it out the park. They've scaled their loan disposals almost 7 to 8x, and they're poised for an amazing 2020. And then the world goes into lockdown, and as we know, loans collapsed, right? It both from a repayment because a lot of moratoriums were placed. People were very uncertain about the environment, and Credit B, after its really strong growth over 3 years, it sees its revenue fall 72%. Right? It's incredibly hard, right? And you are looking at a fintech company which is lending that has reduced in scale. I think anybody would have written off the company then. But I think that what they used out of this, like every good entrepreneur takes lessons from failures, is they became even more disciplined and focused. So if you look at the credit profiles of the people they started onboarding in late 21 and early 22, very high CIBIL scores. Again, tier 2, 3 salaried professionals. They started expanding their base as people started opening up their wallets to spend, and the world started opening up. I think they used adversity in the right way, and they've already gone through the NBFC
Yeah.
crisis. They've gone through COVID, and then now when they enter 22, there's the RBI lending norms because they're a new age lending firm.
Yeah.
I don't think any firm can go through three crises and remain alive. But because Credit B learnt its lessons from both the NBFC and the COVID pandemic,
Yeah.
they were very well placed when the RBI lending norms came.
Right.
And the RBI lending norms were focused on unsecured slash non-collateralized lending, which most of the new age fintechs were doing, including Credit B. But because Credit B was extremely diligent, extremely disciplined, extremely focused, their accounting and the way they were giving loans was did not fall out of the law. And I think
Right.
this was extremely important for them because the other fintechs, obviously, which were big competitors for Kreditbee, they got hurt pretty bad.
Very interesting. Very interesting. So up to this point, they have all the right ingredients, right? They've addressed a very big market. They're solving the right problem. They did a POC, disciplined approach, very cautious, and they've kind of built that engine that has escaped 0 to 1, 1 to 10. How do they go? How do they go from here? Do you feel that they have certain things that become a moat, or is it that very systematic, disciplined approach that helps them scale even through the years now?
Right. So, I mean, there's a joke in fintech, which is the only way you make money eventually is lending. So, all roads lead to lending. And I would say there's a very strong parallel with life. The things you need to do in life are well known, and I would say the strategy is simple, but execution is very hard. And I'd say even Credit B is like an elaboration or an expansion of what life is. They're doing the really hard things well, right? They're in lending. You need to be disciplined to who you lend. You need to be very focused on the segment, and you need to be very razor sharp in your accounting and whatever diligence you do. So I think that itself is a very strong mode for them. They've obviously built a very detailed technology stack, which uses um, deep data models. And now a lot of firms say that we have a proprietary tech model, we have a
Right.
proprietary tech model.
Yeah.
My understanding is that this tech model married with discipline works,
Right.
because if you're not disciplined, no tech model will tell you um, what to do well, right? Because
Yeah.
people are crazy with giving away loans. And I think because of their discipline plus this technology plus the hook of really giving these loans well, this whole process is their moat.
Right.
And I don't think it is hard to deconstruct what they're doing, but I
Hmm.
think it's become increasingly hard to do what they're doing, because they have optimized and scaled it, right? So
Yeah.
the strategy here in lending usually is give the money and get it back, right?
Right.
That's what lending is.
Right.
It's very, very straightforward.
Right.
It's very fascinating to see a company doing something that appears so simple
Right.
and winning at it, because the others have not, even though they've raised a lot of money. And now Credit B had not raised from the typical investors that you would expect,
Yeah.
but eventually as they reach this scale and they have come out unscathed, they triple their revenue and they're back to like 500, 600 crores. They're targeting a book of $1 billion, which is massive. They end up raising a 200 million round in this market, which is insane.
Yeah.
I think it's, we know all kinds of large companies are not able to raise or are having conversations around down rounds. Nobody is able to raise money.
Right.
So in this situation, this company just comes out and is a positive, I think, beacon of hope. And I think what they've done is they've just done the simple things really well,
Yeah.
and that's become their moat. That
Right.
process of tech um, plus being very disciplined.
Right. Got it. Okay, so amazing. So I think Credit B not only gives us some amazing business lessons, to compete in a field where you have the Bajaj Finances of the world, you have a very crowded lending space as well. They're still doing it right by just keeping discipline on the simple things, and also at the same time giving us some valuable life advice. So great. I hope more people read the piece, and it's a company and a sector that we'll continue to track and write about.
The link is in the description for
Okay.
anyone who wants to read.
Okay. Amazing. Thanks, Aviral. And thank you all for listening.